breaks support at 95K and falls all the way to about 91,800. Is the relief rally over and is more downside coming, or do we still have a shot to make it to 100K? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 2:15 p.m. Eastern time, and the price of Bitcoin is currently at $93,032. Now, starting off here with the 2-week chart, yesterday we had a candle close, and it closed pretty good. We had a green candle. It's a little bit indecisive, but green nonetheless, and we were still able to close above the 50 moving average at 88,150, so that shows some strength. The stochastics were low here, which means that we could continue to go up. I was telling you guys it's also possible that we could roll over. Every time we're below this dotted line, we always have that chance. Right now we're having a red candle. We still have 14 days before this candle closes. In the weekly chart, we also closed yesterday. We closed a green candle, but as you can see, we had a lot of pressure down ever since we went up to the high of 97,924, basically 98K. We came all the way back down. The good thing is we did close above the 80 moving average, and I was telling you all I really want is to close above the 80 moving average, and then we'll see what ends up happening the next couple of weeks. Stochastics were on the way up. If we zoom in, I think they could still continue to go up. Again, they could always roll over. They rolled over here prior, so I wouldn't be surprised if that happens. And I've been telling you guys I have a theory that we might not go and test the 50 moving average until the 50 moving average is below 100K, and right now it's at 101,278. So it's possible we just continue to go sideways for a couple more weeks, wait for the 50 moving average to drop down, and then go and test it, maybe go to 100K then. The thing is that I do have this in a bear flag, and we did momentarily get out of the bear flag when we hit 98K, but look, now we're back in it with this red candle, and the more we go sideways, the higher the probability of this bear flag coming down, and this could take us down to about 70K, even 68K, and possibly even 65K. Now on the other time frames, the 6-day, we see that we still have more room to continue going up on the stochastics RSI. We currently do have a red candle. We've been able to stay above the 100 moving average, but still this is just going sideways. This is a big bear flag here. 3-day chart, stochastics are toppy. This looks like it's about to roll over. We should have some support here on the 200 moving average, which is at $90,605. If we lose that, I would expect us to have more downside. And the 2-day chart, we already got some bearish divergence on the stochastics RSI. It looks like we're about to roll over here. We got rejected badly here from the 50 moving average. Ever since then, we got 3 red candles so far. Support is on the 21 moving average, once again at 90,253. We lose that, I would expect for that bear flag to possibly play out. On the daily chart, this is where I really drew the bear flag, and as you can see, we made it to the 100 moving average. We got rejected, and I was telling you guys we have to bounce off the 21 moving average. That's at 92,192. Currently we are doing that, but we are back in this bear flag. We need to try to get out of here in order to stay bullish. The deeper we go into the bear flag, we could end up going down to the bottom of this channel that's around 89K, and then continue going drifting sideways, and then that bear flag could end up playing out. The stochastics are not looking good. We're fully rolled over. We will probably have to wait until we reset here, and that could take possibly this whole week to happen. Now on the 22-hour chart, stochastics here don't look too bad. We still have more time to reset, but we're getting towards the lower part of the stochastics. We did lose a 21 moving average. That's not doing us any favors. As you can see, we directly rejected off this 200 moving average, so this is not bullish. We would have to get above the 200 moving average to stay bullish, and that's at 96,284. On the 12-hour chart, stochastics still need to reset. Pretty much looks similar to the 22-hour chart. 10-hour chart, we could drag here for a while before coming back up. Here we lost a 21. We're trying to stay above the 50 moving average. 8-hour chart, stochastics still need to reset here as well. Take a look at the 4-hour. On the 4-hour, we have some bullish divergence here on the stochastics RSI, and it looks like the stochastics want to point up and continue going up, but look how long we've been dragging here on the 4-hour. This could continue to happen for sure. Very bearish. We lost a 21, we lost a 50, and we're trying to hold support on the 100 moving average. The only thing in our favor is that we are above the 200 moving average. We haven't lost it. That's also at 90,434. Unfortunately, if we lose a 200 moving average on the 4-hour again, there I would definitely expect more downside. I do have to become a bear as soon as that happens, because the last time we lost a 200 moving average, if you guys can see, we stayed underneath the 200 moving average for a very long time, basically from October of 2025, basically until recently now when we were able to make it back up now in January. So basically 3 months under the 200 moving average. So we cannot lose that. Here, I did have a falling wedge. This could have broken us out to about 98K, but this did not play out. If I I elongate the falling wedge, we could say that we're technically still in it and we could still break out of this, but then we would have to change this measured move down here, and now this is only really going to bring us back up to about 96,178. I mean, it's better than where we are right now. Originally, I had told you guys that this looked like a descending triangle, and it looks like that's exactly what ended up playing out. Descending triangle is when we have a flat bottom here, everything's go straight, and then the top keeps making lower highs, and that measured move pretty much played out almost more than halfway. So that's pretty much what ended up happening. It was originally the descending triangle. I ended up changing it to a falling wedge, trying to see a bullish narrative, but at the end of the day, that did not play out. We could technically, like I said, still be in a falling wedge. Let's see if this plays out. The stochastics are low enough that maybe this could happen, but we definitely would have to make it back above this 21 moving average if we want that to happen. On the 1 hour chart, stochastics are toppy. This is looking to me like a bear flag. This is looking pretty bearish here, and if this plays out, a measure move to this bear flag would pretty much drop us to about 89,585. So a lot of things are showing that maybe we do want to make it back down to about 90k and test that. But unfortunately, if we lose 90k and we get back into the 80s, I would think that we're going to drop down to 85k, 84, possibly even 80k or lower. On the 15-minute chart, stochastics are starting to reset here, but again, we just have a big bear flag here at the moment, and if we cannot get above the 200 moving average on this 15-minute chart, or if we make it to the top and we get rejected from that 200 moving average, I probably do see that bear flag playing out and possibly us coming down to 90k. All right guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.